Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we focus on January 2025 inflation numbers and expectations. Last week, the National Bureau of Statistics, NBS, published the much-awaited rebased Consumer Price Index (CPI) report for January 2025. The CPI is used to measure inflation because it reflects the average price changes of goods and services that individuals rely on. By systematically tracking these price fluctuations over time, we can gain important insights into economic trends and the overall cost of living. The CPI is computed monthly and the inflation is reported in two main ways. One, comparing the prices of goods and services in January 2025 with January 2024, which is the year-on-year, and two, January 2025 with December 2024, which is month-on-month. The NBS now tracks prices of 934 items across the states and the FCT to calculate the CPI up from 740 items. According to the rebased report, Nigeria's headline inflation dropped significantly to 24.48% year-on-year in January 2025, down from 34.8% year-on-year in December 2024. This sharp decline follows the NBS rebasing of the CPI, which updated the base year from 2009 to 2024 and adjusted the wage reference period to 2023. The rebasing accounts for changes in consumption patterns and aims to provide a more accurate representation of current economic condition. On a month-on-month basis, headline inflation in Nigeria increased by 10.7%, which is surprising compared to previous months. Food inflation, a critical component of the CPI basket, was reported at 26.08% year-on-year in January 2025, a notable decrease from 39.84% year-on-year in December 2024 under the old methodology. The rebased CPI reduced the weight of food and non-alcoholic beverages from 51.8% to 40%, softening the impact of food price increases on the overall inflation rate. This moderation coincides with the post-holiday slowdown in demand as consumers likely stocked up in November and December 2024, which reduces the pressure of food prices in January. Core inflation, which excludes volatile food and energy items, also declined to 22.59% year-on-year in January 2025 from 29.28% year-on-year in December 2024 under the previous system. This suggests easing inflationary pressures in non-food and energy sectors, possibly supported by relative naira stability in early 2025. However, the month-on-month numbers suggest otherwise, 10.7% month-on-month. The urban inflation rate stood at 26.09% year-on-year, while rural inflation was slightly lower at 22.15% year-on-year, reflecting differing consumption patterns across regions. This month's noticeable decrease in the inflation rates align with several key factors. One, the rebasing exercise itself has recalibrated the CPI to better reflect current spending habits, reducing the outsized influence of food prices. Two, the high base effect from January 2024, when inflation was already elevated, contributes to a lower year-on-year figure. Three, a decline in consumer demand following the festive season and the relative stability of exchange rate has further supported this downward trend. The rebasing of the CPI has introduced significant weight adjustments that impact inflation calculations. Notably, NBS reduced the weight of food and non-alcoholic beverages from 51.8% to 40%, while increasing the weights of several core items including education from 3.9% to 6.2%, information and communication from 0.7% to 3.3%, health from 3% to 6.1%, transport from 6.5% to 10.7%, restaurant and accommodation services from 1.2% to 12.9%, personal care, social protection, and miscellaneous goods and services from 1.7% to 3.3%. Expectations. The reduction in the weight of food and non-alcoholic beverages within the CPI basket from 51.8% to 40% has tempered the headline inflation rate, giving food prices historical role as a primary inflation driver. Conversely, the increased weighing of services such as transport, now 10.7%, and restaurants and accommodation 12.9%, highlights their rising significance in household budgets. While these adjustments suggest inflation may rise at a slower pace moving forward in the future, they do not necessarily signal an immediate decline in the real cost of living as price pressures in key sectors persist. Moreover, the month-on-month figures still raise several questions in the minds of Nigerians when compared to the year-on-year numbers. Investment Employment outlook. The January 2025 inflation rate of 24.48% year-on-year signals that investors might currently enjoy improved positive real returns, especially when compared to average fixed income yields, which are declining and are expected to further decrease in 2025. To ensure financial stability and capitalize on growth opportunities, a diversified investment portfolio remains critical. Including dollar-denominated assets is prudent to safeguard against naira depreciation and recurring risk in Nigeria's economic landscape. Investors should also consider high-yield naira-based fixed income options like treasury bills and reputable commercial papers, which balance attractive returns with lower risk. Additionally, allocating funds to resilient Nigerian stocks with strong performance and consistent dividends can enhance returns. This diversified approach offers both protection and growth potential amid shifting economic dynamics. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.